Welcome to TradeTheMBI.com. This is John. This report is for the 25th of September here, and you can see, we didn't get much action the previous day. We came right to the ABM, which pretty much filled in what we were talking about, where we almost had positive extremes. The yellow tend to do that. We've had very soft shakeout readings, but again, price is still supporting. And even though the movement was okay, it's, as a percentage of where we are value-wise now, it's not very high. So that said, we look at the readings. Obviously, we're in the middle of the start of a short snake that's kind of flattened out. Really needed to see the orange spike past this in order for there to be an expectation of some kind of serious move. Of course, it's just the start of the pre-market on that. The ending day was still on a higher orange, just hasn't turned out to be like that, so we'll see if it shifts before market open or anything. And you can see the NASDAQ move all the way to the 50% back up, but below the ABM yellow, and that becomes critical. And again, it makes it very easy because you can pick either the ABM green and or any of the other magenta or white and move up between there to stay long, and then obviously create yourself a little profit target in there and then adjust from it. Here you have the euro had peaked out, made a new high. Couldn't quite sustain it yet. The political turmoil is starting to heat up in America, and that is going to certainly weigh on the dollar, and that gives us a little back and forth. And again, bonds are recognizing that. At this point, we're sort of halfway between the upside band of 120 and the low side of the 113, caught right in the middle within, broader weakness and a rejection of the green right here. So I would expect bonds to continue lower, especially with the rise of oil now, break out into the new highs. This is definitely going to put some downward pressure on growth. We'll see how much of a bottleneck there is and how much leeway market will give us that signal long in advance, but at least it lets us know that inflation is definitely going to be turning around, and at a certain point that will affect gold. We're just waiting for an actual signal that it's actually gotten somewhere. It hasn't happened yet. From a 5K standpoint, so if we look at Friday's action as we were melting down, remaining short within this overbought right here, and then we ended up trailing down from there. And then as we began the day, we made our new low, and then we put in these bite candles. What was neat about these was it was just a matter, and I was posting about this, waiting for either the cyan to move above the green or the orange to do the same. And that happened right before the breakdown. Right there, the cyan went above, and then at the next start of the next bar, orange was already ahead even before the decline. I was posting that one. And then, of course, we got the orange candle, which is the equivalent of, continuation softness. We expect that low to be retraced when we get these, at least the open of the bar. And that happened immediately. So then you get gold candle at zero. Usually it creates a pop, and then you just look for the first opportunity. In this particular case, again, orange popping above, this was a beautiful one because the orange came above the green, and then you ended up with the split of green down and cyan up, and that's just clear short has the advantage. And now this is a beautiful thing because you can see that even within that, you still can get bounces in between, but the broader situation was it couldn't maintain a dip, and that just led to new lows, which was pretty straightforward. And then, like I like to show on this one, where my little pivot program here that I've been working on with the Diocon paint for adjusting when the yellow candles pop in. When you get those secondary pivots, it's not usually that first initial signal, but those rising red DOC readings from a pivot standpoint led to an okay buy right there. It was slightly overbought, which means you knew you could get a discount from it. And what I like to do is when those move below, I sort of trail them down. I don't just jump on the move immediately because you want it to prove itself, particularly with green staying above red like it did. And then when it got up here again, you can see it just not enough buyers because every time it was getting close to being positive extreme right there, and the algos couldn't quite kick in to really just put it into overdrive. That just led to a retrace, but again, same situation where you ended up building back on the red DOC, and it was just a slow, and literally was dry paint going through the rest of that afternoon because that range was nominal at best. And here again, starting to produce similars. So you're getting some buyers pop in, but the reality is it's not quite enough to trigger a significant rally at this particular point. So that's where it's pretty much midline. When you get this kind of like red right across there, what we're looking for is either plunges below or big moves above, so that we know that we're going to get some kind of significant action. Still the potential of coming back down to this 29.15 to fill that other positive extreme. Got very close to it with the dip the other day, but support is just a couple points ahead of it. It's pretty darn well under our 80% fill rule. Kind of gets there, but still have it as a potential target and weakness. So something to bear in mind when you're looking at the daily action. That's the long and the short of it for now, and should have some of these adjustments with the indicators already built in, plus a little alteration to when dots appear to make it more significant, particularly down at the basing bottom, so that you're not confused just because a bunch of these are dipping below the negative 50, or in this case the negative 60 for the dip below the red line, which indicates you're going to retest those lows on a pop anyway. So maybe reduce a little bit of the clutter to make it just a little cleaner and easier to see. But overall, really strong performance, and the algorithms are just spot on with capturing where we're at so far. So it's all good stuff, and as always, I will put up additional charts like I did the other day and all throughout the last week if there's something interesting that pops up along the way. Trade well, and we'll talk again later.